Right. So let's make a start. Hi, Finimizers. Welcome to another Finimize Live. So I'm Daniel, one of the analysts here at Finimize. Great to have you all with us. Welcome to today's event called M&A Trends, Future Outlook. I'm going to quickly run you through some housekeeping rules, and then we'll get going with the actual talk. So first of all, if everyone can introduce themselves in the chat, say, hey, where you're tuning in from. We always like to see where all our viewers are coming from. And remember, you have to switch to all attendees and not just panelists. Otherwise, no one can see your messages. And just on that, so this talk will be roughly a 15-minute Q&A conversation, followed by, roughly a 15-minute conversation, followed by that Q&A rather. And on that point, can we remember to use the Q&A box down below to ask your questions to our guest today? If you do see a question you like in the box or one you were going to ask already yourself, just upvote it so it moves to the top. And that way we can get through the most voted questions first. I'm going to just give it a minute just to let everyone trickle in. But good to see some guys already tuning in. We've got Michael from London, Josh from London, Meenakshi from India. Sorry for that pronunciation, but hello. Cool. Michelle from London, Sean from London. Cool. Hey, Amit. Great. Justin from Nashville. All right, so we've got everyone trickling in now. So I'll give it a few more seconds, then we'll make a start. All right, let's kick this off. I'm here today with Ray Zhao, the co-founder and CEO of Affinity, a relationship intelligence platform used by over 2,000 investment banks, private equity firms, VCs, and consulting clients globally. Ray, it's great to have you here today. How are you doing?
Great to be here. Thanks, Daniel. Yeah, I'm doing well. Yeah.
Good to hear you. Good to hear. I'm going to jump straight in, Ray, to our event today. So given the last year, obviously, it's been booming for M&A, record deals, record value of deals. What were some of the key trends you saw over that time on the deals that were being done and maybe that Affinity helped make happen?
Yeah, thanks, Daniel. I think maybe like just in the way of like kind of quick context setting, like a quick introduction. I think it'll be good to set the stage in terms of understanding like where our insights into M&A and similar things kind of come from.
Yeah.
So the quick intro to Affinity. So Affinity, we consider ourselves like you can think of it as a next-gen CRM relationship intelligence platform for deal makers. So you mentioned this earlier. We power over 2,000 institutions in more than 70 countries in the financial services world. And basically, we help deal makers find and manage and close deals, their most important deals, using what we call relationship intelligence. And so the universe of institutions that are powered by Affinity, that includes like a lot of folks in the world of venture capital, private equity, investment banks, corporate development, M&A teams. And so we have a lot of insight into like basically the way that those firms are constantly operating, the way that they think. Basically, like we started the company because I founded the company out of the computer science department at Stanford. And we basically built it because we realized there's this paradigm shift that was about to happen when you intersect the cutting edge of what was going on in AI and data science with all this relationship data that we realized every firm in the world owns, but no one realizes they own. So it's like an interesting question, like what's the most powerful representation of people's relationship data? It lives inside all of these like forms of data that people have access to, but people don't realize that it actually is data they can leverage. So it's, information buried inside your inboxes and email and your calendars and public data about people and companies and firms and transactions. And so the underlying infrastructure for what we do at Affinity, we basically tap into all of this otherwise wasted data and we pull it together, we stitch it together to generate these really rich and powerful insights. And that's what powers the next-gen CRM that we've built. And so that's kind of the product that we brought to the world of financial services and all these other players that are a part of it. And it's what kind of drives, our insight into like what's going on generally and like the, across the market. So I think going back to your question, I think maybe the first thing underlying thing this, place to start is this pandemic in 2021, it was a boom time for M&A. And that's not like that's a sharp contrast to the very start of the whole COVID thing when it hit, Q3, Q4 of 2021, when you're looking at it. M&A deal volume for banks were really depressed, and we saw all of that basically sharply turn in January of last year. Now it's changed a little bit since then in 2022, but we'll talk about sort of last year first, to your point. And so looking at some of like the higher level, like behavioral patterns, like, in terms of like what's correlating with what's going on in the world, obviously at a anonymized and aggregated level, right? Yeah, I mean, there's some clear trends that we found. Like one thing, for example, was, and we just recently released this in a recent benchmark report that we did, that there's basically there's a very strong correlation with this huge spike in the number of warm introductions that were being done per deal in the M&A world throughout the course of 2021. So, one key finding from, that report that we released is banks and other M&A intermediaries, they were averaging more than 175 warm intros per month, and they saw their deals close on average 21% faster. Same thing with meeting volume. So meeting volume was super correlated with both the level of deal activity in 2021, finding more buyers per working transaction. Yeah, and so it was a boom time, I think, is a long story short. I think the pandemic initially took a toll, but it really accelerated. In 2020, deals were taking twice as long to close. And then last year, that time to close accelerated massively. I think it went from an average of 150 days to an average of 55 days. So it was a big year for M&A last year. There's a lot of activity back then.
Absolutely. Just on that, Ray. So warm introductions, you're talking people who know other people who've kind of referred them on, right?
Yeah, exactly. Yeah, and it's one of the insights that, so intrinsically, like the industries that use Affinity, it's people business, right? It's all about relationships. They're driven by relationships. That's the most valuable asset that a firm owns. And so I think like maybe, one analogy to use is that the most powerful sort of tool at a partner or an MD or a principal's disposal is it's a warm intro. Basically, that's what captures the power of your network. And so one of the insights that our technology automatically classifies is introduction. So we basically tap into this natural corpus, a stream of data from email and calendar for a firm that they're automatically generating. And by applying this learning layer to it, we basically can automatically and retroactively classify every introduction that's happened for a firm, like since the beginning of time, like who introduced who to who, where. You can use that to answer questions like, last month, like who introduced us to those companies in the fintech space or the crypto space or something. And so we're able to identify and classify those intros that are happening. And that's what helps us at aggregate level understand like these trends. So we're able to kind of stitch together, like, what are the patterns? We see this boom in M&A back in 2021, and it's correlated with all of these, introductions and higher cadence of meetings that are happening on deal by deal level.
Yeah, that's super interesting, because obviously within an investment bank, you will have completely different teams who might not talk to each other, but they might actually have the intro for this team that they might need, right?
Exactly. So, yeah. And the thing that's interesting is, I think it's just such a different, we're doing this, this talk over Zoom, and the world has become really digitized. And I think one of the things that we learned at Affinity was, I think previously when you worked in the same office or the same floor, or maybe a different floor from a colleague, you could just walk over to someone's shoulder and tap them on the shoulder and say, hey, do you have a connection to this person, or what's the best way to get into them? But that's become really difficult, right? Ever since every company went remote simultaneously at the same time. And so we've basically seen that kind of drive a lot of even the utility of being able to identify where are all the hidden connections inside the company. There was this analog way of doing it in the past, but now it's forcibly become digital, and that's where I think a lot of the work that we've done has helped out some of our customers. So
yeah, that's really cool. So I guess it's just a coming together. I guess the digital side of it, and obviously the other reason for all the boom in M&A was super low interest rates, high stimulus, etc. But yeah,
a lot of factors. Yeah.
Absolutely. Okay, that's interesting. So I guess to go to another point, I think taking a look at your recent report that you mentioned, it looks like a lot of the smaller firms are starting to compete more effectively in the space. What do you think that's influencing that shift? And what factors go into it?
Yeah, so I think historically in the past, it's just been this dominance of the bulge bracket banks, the really large players in the space. And, they had a huge advantage just due to size, brand, credibility, like all of these deep connections they have, like both with buyers and with sellers. And what we're seeing now is that this emergent class of boutiques and mid-market banks that are just able to punch above their weight class. And I think that's due to a couple of reasons. It's been largely been on the part of the strategies that are used by these smaller banks. Like one obviously would be specialization. So that's investing in building out very specialized practices, like making bets on very specific sectors, the right sectors and hot sectors, especially tech. Is probably no surprise, but that's paid off really big time for a lot of the biggest names. And then the other lever not to discount, I think, is technology. I think like all these new banks are entering what we classified as like the top 10, by deal count, or top 20. They're really taking advantage of technology that makes their processes more efficient, helps them leverage the advantages they already have. So yeah, people often say, it's not like deal volume itself is not sufficient. It's about quality, like specifically quality connections. And so I think that's also played a really major role.
Yeah, absolutely. I think one thing you'll find with the big banks is that they're so big that it's so hard to change things inside. Whereas the boutiques is quite, they can come from quite a small space and just revitalize.
Yeah, especially when the landscape itself is changing so quickly too, right? Like you've got all these like sectors that have newly emerged that didn't previously even exist. So I think being able to be nimble and adapt and specialize, like it goes a long way. Yeah.
Absolutely. So then yourself then, Ray, as a founder in the tech space, what are your observations been, this year taking place for tech companies, and what do you see? How do you see that going out for those who are looking to engage in M&A?
Yeah. So I feel like there's like a new headline, like a new major headline on this like every week. But I think at this point, if you asked me like, maybe a month ago, I think maybe there would have been, less of a lack of real clarity. But I think there's a clear trend line at this point. We're heading into some really uncertain times. It's like every week that passes, market volatility, like the reality of a downturn, like it's looking more and more real. And I think we know we're there when VC Twitter starts to agree. You have all the well-known firms are starting to publish their guides and their warnings and their slide decks on how to survive. So I think for tech companies, especially like growth stage tech startups specifically, I won't speak as much on the public side. What it means is like more tightening of belts. It's like there's just less money floating around. Like Sequoia just recently published a guide and quote them. I think is a really great quote. Like capital is no longer free; it's expensive, right? And so I think all companies will need to watch their cash really carefully and hopefully avoid raising capital in that environment, just because the conditions aren't great. And so what happens to M&A? I think on aggregate, like I'd expect M&A activity and on aggregate to take a substantive hit. Like from my network and conversations with other founders, this has been true both on the buy side and on the sell side, especially just like we just came off of the most exuberant times in 2021 that we've ever seen. It's just M&A is a lot less desirable, and I think it's going to be considered more of a last resort, if you're looking to sell your company, given the valuations that you're more likely to fetch or the less negotiating power that you have. And if you're a buyer in this time, like you're probably not spending as much time thinking your mental cycles, thinking about, what are all the companies that you should go and try to acquire, and more about just how do you weather the storm, like whatever storm's ahead of us, like do you have enough cash to last the next, 2, 3, 4 years. So yeah, I think we saw like a lot of venture cap, private equity valuations take a hit. I think something similar will probably happen on the M&A side. That said, there are companies that like throughout 2021 and before, they have been ultra disciplined, in terms of cash, in terms of burn. That's not the majority of companies, obviously. But for those companies that have been disciplined, I'd say there's an opportunity now. I mean, not to say that I don't think, tech companies on an acquisition side are cheap. I don't think they have, been that. It's just that previously they were extraordinary. Now in this like new world, like, they may become more sane. So that's probably a very small tranche of companies though, that are in a good position to make more acquisitions. So.
Yeah, absolutely. No, I completely agree. Just quickly for our viewers, remember to put your questions in the Q&A box. I'll be coming to them in a few minutes. Yeah, so I guess what you were saying, Ray, I think it makes complete sense. And I think it kind of splits the two kind of types of company, whereas last year it was anyone and everyone doing M&A. Now we're seeing the large cap ones really go in for M&A. We've seen obviously Microsoft, Activision, Blizzard. Even today, I think they confirmed the Broadcom VMware deal.
Just recently.
Valuations are coming down, and the big guys are now using that as cash piles.
So not every company is like a Berkshire or something that's been like, and that's Berkshire is probably the most the strongest example of ultra discipline over the past few years. But yeah, I think it's going to more concentrate toward those types of deals.
Yeah, absolutely. All right, next question for you, Ray. So obviously time to close is super important. Once the M&A deal's announced, people want to get it closed quickly. They want to do their due diligence, etc. All of this. So again, a question again is, how is Affinity working to help firms improve their time to close and kind of build that track record for their clients?
Yeah, so I say two things. Like the first is just pure data automation. So I guess to sum it up, like what we help a firm do is better maximize the ROI on their time, in the sense of they can spend as much of that time as possible building relationships, executing deals, like talking to companies, to founders, by automating away all the data drudgery that they'd otherwise have to do, like keeping all the tools that surround those processes up to date. This is like the thing that drives, I think, a lot of partners, investors, like bankers mad. Is it's this constant dilemma between, how do I best allocate my time? Do I spend more time actually doing things that are net valuable, in order to advance deals, or is it more, do I spend all of the hours in front of a computer just entering data about every single relationship that I built so far? That's like the biggest headache we have. So we automate away all of that, so the user can focus entirely on sort of getting deals done, like building relationships and growing their network. The second thing is, I mentioned this earlier, but we compute all these insights, right? So by analyzing a firm's network with relationship intelligence, and you mentioned this a little bit earlier, Daniel, we basically can uncover the best path for them in terms of the right intro to the right prospective client or the right buyer. And so kind of going back to that metric that I shared again, like there's a really powerful correlation between that and like the rate at which deals close. And so because it's ultimately a people and a relationship business. So it's automating away sort of the non-human part of like the job, and then so that people can focus entirely on the human part, which is like building relationships and getting to know people, and then giving them insights to help them do that part of the job better.
Yeah, absolutely. Thanks, Ray. So that's kind of ended our question segment. We're going to go on to the Q&A from our audience now. So first question, again, sorry for pronunciations, Meenakshi. So do you see any change in the global M&A market due to any geopolitical issues, etc., or do you still see the deals happening in those environments?
Yeah, I think it's hard to like correlation is not causation. So far going into 2022, we have seen a slight slowdown in terms of deal volumes. Valuations are still high. I'm not sure that will sustain, though. There's clearly a disconnect in some ways with the public side, but it could be due to any number of things, right? Like we are in the most turbulent landscape or situation now that compared to where we've been for a very long time. And so I think there's a large number of different things that are kind of influencing global M&A at the moment. So I think we'll probably continue to see that. It's likely that deal volumes will slow. It's likely that valuations will become more sane. As to whether that's specifically due to everything that's happening globally, geopolitically, that's a tough kind of causation to try.
Yeah, absolutely. And it can probably go both ways, right, Ray? I mean, in terms of valuations, opportunities, etc. But cool. Thanks for your question there so far. And the next one is from Carl. So do you see a shift in companies' capital allocation priorities overall? Like, for example, stopping M&A and buybacks in favor of holding cash heading to this recession? I think you already mentioned something like that before, right?
Yeah. I think it's very, very case dependent on the company. So I wouldn't be surprised, like the majority of companies will, be more conservative on cash. And that's a function of, how aggressive were you with growth over the past couple of years, right? I think there is a minority of companies that are probably larger to the point that you mentioned, Daniel, companies that have been more sort of disciplined in the last couple of years that will become more active in M&A in the next couple of months. So on the whole, I'd expect capital allocation to be more sort of shifted to the defensive side. But there will still be some deals that get done.
Yeah, absolutely. Cool. Thank you, Carl. So our next question is from Amit. Where do you want to take Affinity in the next 2 years?
Yeah, it's a great question. So I think two things, so it's a couple of things. The first thing is that like our long-term ambition is to basically democratize this thing that we call relationship intelligence. Like the whole idea of relationship intelligence being that there's all this hidden data that's locked away and data sources, communication tools that everyone already uses, but no one really kind of acknowledges as valuable data. And so we think that's the next major shift, essentially. Like if you build the most advanced technology for ingesting that information, structuring, understanding it, that could be used to build a whole host of different types of products and tools that are going to eventually change the way that everyone thinks about their relationships. And so that's by definition, a vision of democratization. Like we want to basically put Affinity in the hands of as many industries as possible. And so I think two vectors that are happening in the next couple of years, like one is we want to basically be spreading Affinity to more sectors in financial services, professional services, getting it in the hands of more industries, more different types of firms, because ultimately any industry that's driven by relationships, I think is a good fit for the platform. The second thing is just investing and doubling down on data and doing essentially magical things with that data. So there's a lot of like data out there in the world, like we're literally drowning in data that's useful, that currently isn't being tapped. I mean, you and I are on a Zoom call right now, right? So there's like many different like silos of information and data that's out there that we can really aggregate and unify and build great things on top of. So those are sort of the two like major vectors that we're investing in, really excited about.
Brilliant. So it's basically, there's more to this than just M&A. It's kind of just a much wider vision, right?
100%. Yeah. Like we think about it, like, it doesn't matter actually who, like for anyone in the world, right? Like how many, we're talking a lot about sort of the financial side of this, but like, I think the thing that gets lost often is that, relationships are such an asset as well. Like how many assets are there that you, build up over your entire lifetime that you take with you like throughout your life as you go from school to school or from job to job, whatever it might be, right? Like there's a countable number, that you could probably count in your hand. Like maybe you have your bank account that you open, you have your stock portfolio, whatever. But arguably you still sell your stocks. You could still, close your bank account, whatever it might be. The thing that's counterintuitive is that the people that you meet and like the relationships you build, that's as much an asset class as any of these other things. And it's arguably even more valuable. So when you look at the way that, the best operators in some of these industries, like when we talk to some of the best investors in venture capital or private equity, like they have a discipline in terms of thinking about relationships as an asset that they apply as rigorously as the way they apply to thinking about things like how do you allocate, capital, or how do you make the right investments, that sort of a thing. So they're literally saying like, of all the people that I know, how am I thinking about maximizing the value of the network that I build? How am I thinking about maximizing the value of how I leverage my network in order to, get more deals done and everything? That's kind of the thing that really separates like the best of the best in a number of these industries. So it's just so easy to kind of think of relationships as this like second class, like, asset or, citizen. And it's not something to focus a lot of very intentional energy on. But I think the best investors really understand that and understand what it means to manage that well. So yeah. that's kind of the whole catalyst for why we're doing what we're doing, right?
Yeah.
And the goal is to bring it to everyone.
Really good point, Ray. I think a lot of people don't kind of look at it as a solid thing because it's so intangible, but actually the relationships we have are, probably one of the most valuable thing all of us have, right?
Yeah, it's being intentional about thinking about, build it, how you manage and build relationships as kind of like a valuable asset. Like that's the thing that I think is easy to get lost. So totally.
Cool. So another question we have is, which sector has the most M&A deals or has had in the past, which I think we know the answer to, and where do you see that shifting going forward?
Yeah. So at least over the last 2 to 3 years, we really saw sort of tech, media, industrial, manufacturing. Those are sort of the front runner sectors. That's actually one of the questions that we looked into as a part of this recent report that we had shared, which I think was just dropped into the chat. And I think that's going to continue to be the case. Like it's really these three sectors that have dominated in 2021. That was an extrapolation of a trend that we saw across M&A starting in 2019. And they're so far, I would say, ahead of like other sectors. It's difficult to see like that trend not continuing unless there's some tectonic shift, something crazy happens. So
yeah, I thought it was interesting actually just looking at it. I think one of the stats was like, I think manufacturing was the third, and
yeah,
manufacturing itself was more than all of the rest added together or something.
yeah,
Right.
yeah. It's one of those things where some industries get more of the limelight in terms of what you actually read about in the news. And certainly, software, technology like tends to get a lot of the limelight, and that's growing really rapidly. That's not a surprise at all. But like it's important not to write off like some of these other major sectors, industrial manufacturing, that sort of thing. So
Yeah, no, that's super interesting. I think another point as well is, I guess now we're seeing, obviously energy booming. The energy companies, do we see them come in, and do we see them have a big part in the M&A as well, which is something I kind of think might be a thing. But yeah, I think it makes sense that you'll see those things. That's where the technological innovation is coming from. The manufacturing side to pure tech firms, etc.
totally, yeah.
Brilliant. So another question we have is from Anders. So do you think governments will get more and more involved in blocking M&A as a serious risk?
I don't see, I guess personally, like a trend or a reason to think that will be the case. Investigating like or maybe that it will be more the case than it has been in the past. Just looking at some of the larger deals that have happened recently, it's the same sort of fundamental drivers, right? Like there is involvement when like you talk about questions like antitrust and everything like that. So don't see a reason for that to be more the case moving forward from a first principles basis than what it's been over the last like 2 to 3 years. So yeah, it's hard to say. I don't know for certain, but I don't see a reason for anything to fundamentally change going forward.
Yeah, that makes sense. I think I kind of get where the question was coming from in terms of, I guess, countries are becoming more kind of isolated these days. The global network of things has been kind of thrown into a mess. So, countries are more like trying, for example, the US kind of putting a lot more into kind of domestic manufacturing, for example. And maybe, for security concerns, they might block certain things.
Yeah. Well, the thing
But
is, if you look at the data though, is that like looking at sort of where M&A activity has happened by deal volume, at least last year, like it was overwhelmingly sort of concentrated in the US, in Europe, et
yeah,
cetera. So, and I think these were like, companies that were buying other companies within sort of their, these regions. And so, yeah, that might be true, to some extent, but at least looking at it from the high level, I don't think there's anything that's fundamentally changed.
brilliant. I think we have time for one more question, maybe two. Let's see. So another one from Carl then. So given acquisitions rarely drive the synergies that they kind of do say they will on announcement, is there a way that firms can use Affinity to reassess their expectations before closing the deals?
Yeah, due diligence is really interesting. I think there's no substitute when doing M&A for really understanding the fundamental research that comes with understanding a company. So understanding the financials, the metrics, understanding how aligned the people and the culture are. Actually, funnily enough, like in my own experience as a founder, we've done one acquisition before in the past, and it was incredibly successful. We basically joined forces at the start of the pandemic with this company out in Toronto called Nudge, and that's what catalyzed Affinity Canada. That's a substantial team now, which has been really awesome to see. And I think the people in the culture part is like often lost, but like understanding synergies in terms of technology, people, culture. I actually say the culture side is like a lot of where things end up falling apart. How do you sort of make sure that there's a really sort of sensible and a great like joining of forces that actually happens, as opposed to after an acquisition happens, like people feel demotivated, they don't want to work at a company anymore, that sort of a thing. So that's the most important part, I think, of assessing, is an acquisition going to succeed or is it not, right? Where Affinity, I think, historically has helped is in terms of the due diligence side. So it's, and this is as true for an acquirer making an acquisition as it is for an investor thinking about investing in a company, right, is, are you kind of getting all the back channel knowledge about what's actually going on inside the company? You know, how strong actually is management?
Yeah.
Like that's very much a who knows who, understanding what are connections and, you know, who's strongly connected with someone who could give you, you know, some great, you know, sort of knowledge or insight into like the way that a company is actually run, as opposed to like what they're publicizing, you know, on their, you know, marketing or whatever that might be.
Yeah.
But again, so I think it's one area where it helps. But the core of what drives whether M&A succeeds or not is it is sort of more at the fundamental level. Like, is there great alignment with the businesses and a great alignment with the cultures of the companies?
Yeah, absolutely. It's just I guess you said just using those relationships to kind of make sure that you know, I guess those synergies that they think are going to happen actually, you know, have a
Yeah, exactly. Yeah. And it's not unlike, you know, like, you know, for anything, you want to invest in a company, you want to buy a product, right? So much of where our trust in the fact that we're making the right decision comes from. You basically ask people in your network, you know, like who are folks that have worked at that company before? Who are folks that have worked with that company, advised on a board, whatever it might be. Those are the very raw and real insights that I think can often illuminate whether you're going into a good decision or you're not. And so that's where sort of relationships and relationship intelligence and where affinity tends to play a role. But it's only one part of a much bigger picture. It's a long story short.
Brilliant. Thank you so much, Ray. Sadly, we've run out of time. I think I could talk to you for another couple of hours, Ray. So I really appreciate your time here. I'm sorry to everyone who I didn't get to the questions in the Q&A box, but I hope everyone kind of got some insight from our talk today. I think it's really interesting to hear about, I guess, the importance. I think the main thing is the importance of relationships and how we can all leverage that as a real asset in our own lives. But thanks so much, Ray. Thanks for everyone tuning in today, and see you all next time on another Finimize Live.
Thanks for having me. Yeah, this is great.